So this is the sum of merger. When I'm talking about merger means two businesses combined with each other. So a sole trader can combine with a sole trader or a sole trader can combine with a partnership. Am I correct?
Yeah.
And we are doing merger of a sole trader with a sole trader. It's a past paper question which is come in Feb March 2020, paper 32. Ashita, can you please read the question?
Yeah.
Okay,
Ahmed and Omar were sole
one
traders in the
minute.
same.
1 minute. Before we read the question, always first thing what we try to read. What do they want from us? Okay.
Uh,
So when you read what do they want from us, you try to read the question in a way which gives you answer to that question. So can you read what are they expecting from us?
Calculate the value of goodwill of each of Ahmed's and Omar's businesses.
Okay, so they want the value of the goodwill of Ahmad's and Umar's business. How do you calculate goodwill?
You will,
Anybody?
hmm?
Yeah, anybody can answer. How do you calculate goodwill?
You do non-current asset plus current asset minus non-current liability minus current liabilities, and then you get the business value, which
This
you,
is called what?
um,
Not to
yeah, NATO,
This is called the NATO. So the net assets taken over is compared with what?
the business's value.
Okay, it is compared with business value. So when you're finding the NATO, you will take the book value or the value at which you take over.
Value at which you take over.
So value at which you take over. So NATO is compared with NATO
Value at
is
which you take over.
compared with the value outside.
Hmm.
Okay. Or the value at which you're going to buy the business. Okay.
Yeah.
If the NATO is, say, for example, 300,000 and you're buying the business for 400,000. So what will
Hmm.
be the goodwill?
100,000.
Okay, 100,000. So you know how to calculate goodwill, right?
Hmm. Yeah.
Ashita, even you know how to calculate goodwill?
yeah.
Okay, fine. Now read the question, please. Please read.
Ahmed and Omar were sole traders in the same trade. They decided to merge their businesses to form a partnership on 1st January 2020.
Hmm.
The books of accounts of Ahmed and Omar had the following balances of assets and liabilities at 1st January 2020.
So what is
Plant
this?
and equipment,
What is this?
bank overdraft.
No, no, no. What is this?
Oh,
Um,
the balances of assets and
The
liability
book
on
value.
1st.
okay.
Okay. Do I need this while
No,
calculating NATO or
No.
goodwill?
no.
No. Okay, fine. Go ahead.
So should I read this or no? The value of each sole trader's business at 1st January 2020 were Ahmad 400,000, Omar 300,000.
What is
The
this?
part, this is the capital.
Mm-hmm. The value which is their existing value of the business, right? In the
Oh,
market. Okay, fine. Go ahead.
the partnership would take over all assets and liabilities of both business and following values.
So this
Business
will
at the
help us to
following
find
values.
us what? This will help us to find what?
This will help us to find the NATO.
NATO. Okay, fine. Can you tell me what are the non-current assets and current assets over here?
Yeah. Non-current assets are plant and equipment, a
Hmm.
motor vehicle,
Hmm.
and current assets are inventory, cash at bank, trade receivables, and current liabilities are trade payables and bank overdraft.
Okay, very good. Okay. So what do they want us to find?
the value of goodwill for each of
Ashita,
the.
can you help me? How do I find the value of goodwill with the given information?
So you have to do non-current asset,
Which one you will take? This one or this one?
the down one.
Okay, the value at which you've taken it over. Okay,
Yeah.
and
So it'll be non-current asset plus current asset.
take, right?
Yeah.
Okay. So you will take all your non-current assets plus current assets minus current liabilities.
Current liability.
What
You'll
you will
get
get is called what?
the NATO,
NATO is compared with
the business value,
what will you get?
then the goodwill.
Goodwill.
Okay, fine. So please find the goodwill. I'll wait for you. Now, what have they asked us to prepare? Can you read the B part, Ira?
Yeah, prepare the statement of financial position of the partnership at 1st January 2020 if goodwill is included.
Okay, fine. So they want the statement of financial position. That means they want the new statement of financial position. Are you with me?
Hmm.
The new statement of financial position will be at which values?
The new values.
The new values. New values are which values?
The ones that are given in
The
the
ones
second.
that is taken over.
Yeah.
The new value is the value at which you have taken over the business. And if goodwill is included, this means that they want you to raise the goodwill.
Hmm.
What do they want you to do? They want you to
Hmm.
raise the goodwill and they want you to show the goodwill in the books. Can you tell me what is the total value of the goodwill?
75,000.
How did you get that? Ashita, please answer.
I don't know how she got 75,000.
This is the
39,000.
goodwill of Ahmed's business.
Hmm.
Oh, total means adding, na, both.
I cannot teach English in accounts. Total value of goodwill. So this is the goodwill of Ahmad's business and this is the goodwill of whose business?
Omar's.
Mars business. So the goodwill of Ahmad's business is 39,900 and the goodwill of Umar's business is 35,100. So the total value of goodwill is 75,000. Are you with me?
Hmm.
When you are making the statement of financial position after merger, so do you need to show Ahmad and Umar separately?
No.
No. And what will be the capital of Ahmad and Umar? Do you have any idea what will be the capital of Ahmad and Umar?
No.
No. Okay, fine. Let's see. I am going to merge this business and I am going to make a statement of financial position. Are you with me?
Yeah.
Okay, fine. Plant and equipment will be shown at what value?
374,000.
Please start adding both of you.
Hmm.
Motor vehicle will be shown at what value?
111,000.
Ashita, you are not sitting with a calculator.
I'm doing.
Inventory is what value? 50 to 500 plus 30 to 400, 86 700.
86,000.
Did they want us to include goodwill also in the statement of financial position? Did they want us to include goodwill also in the statement of financial position?
Yeah, they wanted us to.
They want us to include the goodwill. So when I am doing my non-current assets, I will have my plant and equipment, I will have my motor vehicle, and I would also have my goodwill.
Hmm.
Okay, goodwill would be 39,900 plus 35,100, which would become 75,000.
Hmm.
So my total non-current assets would be the total. You all can have a look over here. Non-current assets would be plant and equipment total, motor vehicle total, and the goodwill, 560,000. Are
Hmm.
you with
Okay.
me?
Yeah.
Okay. Now let's go to the current assets. What is the current assets?
Inventories,
Inventory
What would be the total of your inventory?
86,900.
900.
86,900.
86,900. Then,
Then
You,
cash at bank will be
yeah.
28,600 only.
Hmm.
okay, now I want you to just look over here. We are merging the business. Are we or aren't we?
Yeah.
That means the total cash would be merged up.
Yes.
Yeah. Ali Ahmed does not have a cash at bank, but he has a bank overdraft.
Yeah.
And Umar has cash at bank.
Hmm.
If I am going to merge this up, what will be the value of cash at bank?
19,700.
19,700. Did you understand what did I do?
Yeah.
What I
Yeah.
did?
You did, you took the bank overdraft
You
and then you
subtracted by cash
subtracted
at
in
bank.
the, yeah.
Yeah, because I'm merging the business. So it does not make sense that I have money in the bank also and I have bank overdraft also.
Hmm.
Yeah.
Okay. So the bank overdraft has to be wiped off from the money in the bank because now the business is one.
Hmm.
How about the trade receivables?
Trade receivables is,
110,000.
yeah.
110,000. So non-current assets plus current assets. So your current assets will include your inventories, trade receivables, and cash at bank. So this will give you your total assets. Are you with me?
Hmm.
Hmm.
For capital and liabilities, you will write capital of Ahmad and Umar.
You write the business value na as capital.
Business value because this is the amount at which they are purchasing or this is the amount that they have introduced. You can either write this business value. If you do not realize, you can find it as balancing figure.
Hmm.
But when you find balancing figure, you will not have a breakup of Ahmad and Umar.
Yeah.
Both is acceptable. Okay. But this
Hmm.
is more appropriate.
Yeah.
And for current liability, you will have the trade payables. You are just going to add both the trade payables. That is your 42,500 plus 34,100.
Hmm.
So you will get your total capital and liabilities and your statement of financial position when you are including the goodwill.
Hmm.
Including the goodwill, that means it is goodwill raised.
Okay.
Okay, this is goodwill raised. Second thing, because you are including the goodwill, your capital account is this much.
Okay.
Because what is actually this? This is NATO plus goodwill, right?
Hmm.
Okay. If you do not include goodwill, if you do not include goodwill, the capital will always be the NATO.
Okay.
Understand properly? This is NATO.
Hmm.
NATO plus goodwill is the business value. Yes?
Yeah.
Hmm.
Because they want us to include the goodwill, I will use this value
Yeah.
as capital. If they don't want us to include the goodwill, then the capital will be NATO.
Hmm.
If you have forgotten the explanation, you can go back to the video. So, this is your statement of financial position, which is including the goodwill. I'm waiting for you. Those who are watching can pause, do the statement of financial position, and then we'll go ahead. So, what do you understand by the C part? C part tells you that you have to calculate the capital account of each partner. Calculate the capital account of each partner after goodwill is eliminated.
Hmm.
How would you do that?
Um,
Eliminated means what?
removed, written off.
Written off. That means you have the capital account of the partners when the goodwill is already raised.
Hmm.
Yeah, your
Yeah.
goodwill was already raised over here. That
Hmm.
means this is the capital account of Ahmad and Umar. How
Hmm.
much? 400,000 and
Hmm.
300,000. Ashita, are you with me?
Yeah.
Goodwill is already raised. Now they want you to write off the goodwill and find the new capital balance. So which side do you write off goodwill?
Debit.
Debit side. That means after you write off the goodwill over here, you will arrive at the new balances after writing off goodwill.
Hmm.
Okay. You write off in which ratio?
Old ratio.
You raise in which ratio?
New.
All partners new ratio.
Goodwill is raised in which ratio?
Old.
Old ratio.
O4. Goodwill is raised in O4. Goodwill
Hmm.
is written off in which ratio?
New ratio.
New
APNR.
ratio. Do you have the new ratio?
No. Oh yeah, 3:2.
We have the new ratio. That means if I want to write off the goodwill and find the new capital account balances, I will have to minus the goodwill written off.
Hmm.
Are you with me?
Yeah.
Either you can do it that way or you can just make the capital account and write the new written off over here and find the new balances.
Hmm.
Okay, fine. Let's see. Okay, fine. Tell me, how do you write off goodwill?
So I'll do 75,000
First, I
into,
will write the capital balances, which
yeah,
includes goodwill, right?
yeah,
What is the capital balances which includes goodwill?
400,000 and 300,000.
400,000 and 300,000. Ashita, you with me?
Yeah.
Mine is goodwill written off. Goodwill, what is the total value of goodwill?
75,000.
75,000. Goodwill will be written off in which ratio?
3:2.
New ratio. New ratio is 3 is to 2.
Yeah.
Yeah.
So Ahmed's share will be how much?
45,000.
75,000 into 3/5.
Hmm.
So 45,000. And Umar's share will be 75,000 into 2/5. That is
So it's
30,000.
30.
So the new capital account balances after goodwill is written off is how much?
355,000 and 270,000.
355,000 and 275,000. So
Hmm.
the new capital account balances after goodwill is written off will be 355,000 and 270,000.
So written off is in new ratio and raised
Raised
is
is
in
in old ratio,
old ratio.
written off is in new ratio. I would
Okay.
still tell you, you need to again go back to all the videos and do the basics.
Okay.
Okay, do the sums. It looks easy, but it is very difficult to recall when the application comes.
Okay.
So when you do it 2, 3 times, you will get it.
Hmm.
Okay. Explain me the meaning of the term goodwill.
Good reputation.
Goodwill is the reputation of a business
You
in
write this
monetary
for three
value.
marks. Will you write this for 3 marks?
No.
Oh,
Tell me what will
Goodwill.
you write for 3 marks?
Can we write goodwill is a non-current asset and all that also for 1 mark?
Yeah, tell me now. What do you think?
Ah, okay, so I'll say. So, goodwill is a non-current asset. It is the reputation of the business in monetary terms. Bas, itna I will write.
Goodwill is never. Okay, come on. That will give you 2 marks. I will give you. You need to memorize this. What do you mean by the term goodwill? First thing,
Goodwill.
it is an intangible asset. Okay,
Okay.
it is an intangible asset. It is the excess value of the business over its NATO, net assets taken over.
hmm.
It is the excess of the business value over its NATO. It is usually measured when there is an acquisition or change in the structure.
Hmm.
It occurs because of the strong image, good reputation, good location of the business that Ashita has already covered. So
Yeah.
this you need to learn for 3 marks. Okay? You need to learn and then you will write, not without learning.
Okay.
Okay, fine. Let's go ahead. I'll give you time to do all this, but first we'll discuss it. Come on, E part. Do we show goodwill in the books? I'm asking you a question.
No,
Do we
we don't.
show goodwill in the books?
No.
We raise the goodwill and write it off, right?
Write it up. Yeah.
Why, when we are writing it off, we are actually eliminating goodwill.
Hmm.
Okay. So why do I do this?
Because the new partner, someone that comes in, they will get to benefit from our goodwill. So we need to like charge them for it.
You need to charge them for it. For that reason, you're raising it. So do you know the exact
Hmm.
value of goodwill or you're just estimating?
Uh, we're
Do you
estimating with
know
the
the
market
exact
value.
value of goodwill or you just estimate?
We estimate.
That is the main reason why we write it off. Because it is just an estimation, you can never value the exact goodwill. Okay, so it is always advisable that if you want to take the benefit of goodwill from the incoming partner, you would first raise the goodwill and then eliminate it. So
Yeah.
there is an accounting concept which supports this elimination. What accounting concept?
Um, the money measurement one,
Yeah, I was just gonna say that.
By money measurement.
because the principle says that whatever does not have a monetary value, you don't record it.
We need to record that.
Okay, and you need to value goodwill whenever there is a change in the structure.
Hmm.
So when there is a change in the structure, as in I'm telling you that when there is an admission, retirement, merger, you need to give the old partners the benefit of the goodwill.
Hmm.
But you still need to eliminate it. It is because of the money measurement concept.
Hmm.
Okay, goodwill is recorded as an asset because of acquisition or merger. Okay,
Yeah.
however, goodwill cannot be exactly quantified in monetary terms. Okay,
Hmm.
this is one accounting concept that supports elimination of goodwill.
Hmm.
What is the other accounting concept that supports writing of goodwill? I
Prudence.
write off goodwill because I do not want my assets to be overstated. And
Yeah.
prudence tells you that your assets should not be overstated and expenses should not be overstated.
Hmm.
Yeah, your
Yeah.
Yeah,
assets should be shown at the uh, realizable value. So you
I
Yeah.
write
realized.
the goodwill. So this is another accounting concept that supports elimination of goodwill.
Goodwill. Yeah.
So Ira, you will make the notes for goodwill,
Okay.
meaning of goodwill with the definition, and
Hmm.
two accounting concepts that supports elimination of goodwill.
Hmm.
Okay, are you with me? Ashita, can you repeat two accounting concepts that supports elimination of goodwill?
So the first one is money measurement, which says that it is goodwill is recorded as an asset, okay, and because it is in monetary value,
What
okay, and
nonsense are you speaking?
it's written there, and you
I
said
am
that.
I'm so I don't want you to read and say na because you're not reading properly.
Okay,
I
should
have
I say like
explained you why are you eliminating goodwill? Why are you removing the goodwill?
okay, okay? So you're removing the goodwill because first is prudence, so that the asset is not overstated and the expenses is not overstated. Okay.
Goodwill is
And
not an expense. Goodwill is just an asset. So the
Yeah,
concept
but
of
I'm saying, okay.
accounting concepts of prudence tells you that assets should not be overstated, and that is the reason you remove goodwill. Here only the explanation is given. You have to develop it because every accounting concept will be for 2 marks. 4 marks, okay?
Hmm.
Okay.
Another accounting concept that supports elimination of goodwill.
Mm,
Ashita, come on, tell.
Yeah, it's a money measurement. With this one, I didn't understand properly.
Ira, can you please explain her?
Yeah, so goodwill is a non-monetary like item. So you're supposed to write it off because like you're matching it with the market value then.
Wait. Goodwill is an intangible asset. Am
Yes.
I correct?
Yeah,
Yes.
Why do I why do I raise the goodwill?
So that you can write it off.
I raise the goodwill because I want to give the benefit to the partners for the efforts that they have done.
Yeah.
There is a change in structure.
Hmm.
Okay. So
Yeah.
what happens is that there is a change in the old structure of the business. There is either a merger, acquisition, admission, change in profit sharing ratio. So what do I do? That I want to give the benefit of goodwill to the partners. So I value the goodwill.
Hmm.
Do I do this?
Yeah.
But can I exactly tell what is the value of the goodwill?
No.
Can I exactly tell in monetary terms that this is the value of goodwill? You will be sold at this much.
No.
Ashita,
no,
can you exactly tell me what is the value of my goodwill
no.
in
Baha.
monetary terms? No, you cannot tell.
Yeah,
Okay. So goodwill cannot be quantified in monetary terms. Can it be?
No.
It is just one estimation that I am doing and I am raising the goodwill and then I'm writing it off. So they're saying if you're raising the goodwill, why do you want to write it off? If you're raising the goodwill, why do you want to write it off?
Yeah.
Why?
Because you want to reward the
It's
partners who
just
are.
a journal entry. But think from the accounting concept point of view. There is a change in structure. You are raising goodwill. You are putting the goodwill in the books. But why do you want to eliminate it? Why do you want to write it off?
Because it doesn't have an actual monetary value.
Because it does not have an actual monetary value. And our accounting concept, money measurement concept tells us that anything that cannot be quantified in terms of money should not be recorded in the books.
okay.
So goodwill does not have an exact quantified value. Does it or it does not have? Does goodwill have an exact quantified value?
No,
Ira, answer. You're on mute.
Sorry. Yeah, sorry, I was saying that it doesn't have a
It does
quantity.
not have an exact quantified value. That means I cannot measure it in terms of money. So
Hmm.
even though I am raising goodwill to support the money measurement concept, what do I do?
You write it off.
I eliminate it from the books. Why do I eliminate Ashita?
because it does not have the exact value.
Okay. So give me again the two accounting concepts that supports elimination of goodwill, Ashita.
Okay, one is money measurement because the goodwill does not have the exact value, so you need to eliminate it. And second is prudence, so that the assets are not overstated.
Okay, very good. I'll go ahead. So this is the reason why you eliminate it. Can you tell me the reason why you raise it?
To get to know uh,
So that
like
to
to
reward
reward
the
the
partners for
yeah.
their efforts. Okay. Whenever
Hmm.
there is a change in the structure, goodwill will definitely be raised.
Okay.
Okay. Can you read this additional information, Ashita?
Yeah. The partners plan the partners plan to purchase additional equipment costing $80,000. They are considering making loans to the partnership or applying for a bank loan. State one advantage and one disadvantage to the partnership for each option.
First, can you explain me the question?
Yeah, so the partners want to buy additional equipment and they are thinking if they should take a loan from the bank for buying the additional equipment of 80,000. That's the thing.
They are thinking whether they should take a loan from the partnership or they should take a loan from the bank.
Hmm.
Oh, yeah.
Okay. What happens if you take loan from partners? One advantage, one disadvantage. So two
No
points for
No,
this,
you
two
have
points
to,
for this.
you don't have to take like tension. I mean, this you frame, I'll tell you, but you don't have to take like tension for like paying
Why
like
you
half
don't have to take tension?
no interest.
interest, of course, you have to give
Loan from
Bye-bye.
partners have to be given interest 6%.
less interest. Bank takes 12, partner will take 6.
Do you have exact information?
No. But yeah, banker standard rate is 12%.
Do you have exact information?
No,
No
no.
collateral.
Okay. If you take loan from partners, what is the advantage?
No collateral needs to be given.
What is collateral?
The assets that you're like, in case I'm unable to pay off the loan, you can take all this.
Time is saved,
Uh,
no security
No
to give.
security. Yeah.
What is the disadvantage if you take loan from partners?
Can cause disputes.
Hmm?
Can cause disputes within partners.
Why?
हो सकता है you not give one partner can think oh I'm so superior because of me the business is working and
Who
then
is
the other part
taking interest?
yeah okay
So one disadvantage of taking loan from partners is that partners may not have money.
hmm.
but
Okay.
how is that a disadvantage that means you won't get the loan only
So I just want to write.
okay may not have enough funds
Yeah, may not have enough funds. Okay. So to buy additional equipments costing 80,000, what happens if you apply bank loan? Advantages of applying bank loan.
You get them for long periods of time.
Okay, you get it for a long period of time.
You can take it for a high amount.
You just want 80,000.
How much? Oh, okay.
What
Mm,
is
but
the
the
disadvantage?
disadvantage will be you
interest
need to
needs to
give
be paid
collateral and interest.
Interest has to be paid, security needs to be given, it is time consuming.
Yeah.
Okay, so with this, I have you all will answer now D, E, and F. I will
Oh.
wait for you. The marking scheme has only advantage and disadvantage of one because it is not done properly. Okay, you all will
Hmm.
write advantages and disadvantages of two. Send me the images.